Dear friends, as we end the year, we want to share with you our thoughts on the investment environment and a brief outlook for next year. Our global view is that the economy is running along in as good a pace as one could expect. There's ample liquidity, and with interest rates low and following a path of slowly climbing back to normal, the competitive landscape for investments still favors equity over fixed income. Globally, we continue to be positive. Both developed and emerging markets should continue to show signs of growth. There may be reason to believe that the tax and economic changes in the U.S. would help those economies as a result of the significant increase to government spending. Risks continue to exist and can't be ignored. However, the underlying behavior of investments are usually driven by the profitability and earnings of the respective companies. We continue to feel that these earnings are on a continued path of improvement. We've seen that during the recent quarter, earnings reports have been better than expected, both in the U.S. and abroad. We continue to position your portfolio to take advantage of this continued growth. The fact that we are constantly hearing about a correction or a market crash leads us to believe that this has further to run. Markets usually don't fall significantly when investors are expecting it. We are overweight equity over fixed income. We're weighted neutrally to the U.S. and developed markets and slightly overweight emerging markets. Our U.S. equity exposure is leaning towards large cap companies. We are diversified amongst the major developed markets, and in the fixed income area, we're invested through active managers who have demonstrated an ability to navigate challenging interest rate environments along with income-producing exchange-traded funds. Lastly, we would point towards a continued increase within our portfolio of alternative investments. We feel there are opportunities to improve the risk-return profile of our portfolios by including investments in areas such as alternative credit strategies, hedge fund, and commodities. The latter is an area we are not yet committing to, but looking actively at adding in the next year. With continued global economic growth, there will be a need for raw materials and resources. We close by humbly thanking all that have entrusted us with their valuable assets. We are committed to making sure that we align your investments to your individual needs and objectives. We also take this opportunity to thank you for your support and to wish everyone a very Merry Christmas and a very joyous holiday season. Thank you.